All right, so the news of the day, if you follow cryptocurrencies at all, even if you're not invested, is that FTX customers' accounts were essentially locked, withdrawals were locked, people could not withdraw money. And this is just the latest disaster in the crypto industry. And what I want to talk about today is why no matter what exchange your money is at in the crypto world, your money is not safe. Even if it's not invested in any cryptocurrencies at all, but it's all completely in cash in an account at any of these exchanges, FTX, Coinbase, any of the exchanges, your money is not safe and it's not insured. And I'm going to talk about exactly why. Okay, so here's the news story, right? The crypto market fell on Tuesday amid rumors of insolvency at crypto exchange FTX and worries about the financial conditions of its sister company, Alameda Research. Bitcoin and Ether were lower by 6 and 8%. Crypto assets tied to Alameda, the trading company also owned by billionaire Sam Bankman-Fried, were suffering steeper losses. The FTX token, the native token of the FTX trading platform, has fallen 23% in the past 24 hours. Solana, of which Alameda is a big backer, has lost 12%. Coinbase fell 12.5%. Robinhood, in which SBF, Sam Bankman-Fried, has a 7.6% stake, fell 9%. Crypto banks are following. And so basically, if you remember what happened with Celsius and Three Arrows, where people just literally lost their money that were in their accounts, people are saying that there's a lot of mirrors to that. On Tuesday, FTX halted withdrawals from the platform after spooked investors attempted to pull their funds en masse. Investor confidence has been shaken after Binance co-founder tweeted over the weekend that the company would sell all of its holdings in FTT. Binance is the largest crypto exchange in the world by trading volume and was an early backer of FTX. Basically, Binance said, due to recent revelations that came to light, we've decided to liquidate any remaining FTT on our books. So that just scared everybody, right? Okay, and so apparently these companies came to some type of an agreement. I guess Binance is acquiring FTX, but now I just want to get into why the crypto space is just uninvestable at this point, and maybe some of these coins 1000x from here, and I'm gonna miss out on getting rich on that or whatever. The bottom line is just that I don't need that. And the truth of the matter is if I owned some crypto or on some exchange, then I wouldn't be confident enough to hold it in any large enough meaningful amount of my wealth that it would make a difference anyways, because the second it became an amount of wealth that I was concerned with, I would have to sell it and liquidate it and take it out, because I would be too nervous that wherever I had it was going to get locked up, or even if I had it on some type of cold wallet or something like that, that would get screwed over somehow. The fact of the matter is that you can have a good job and save money and invest in things that are just structurally more secure and have all the money you would ever need, right? And so until there's better solutions and safer solutions in the crypto world, I have no interest whatsoever in the stress associated with it, no matter what the return potential is, right? And so here's the thing, FDIC insurance. And this is where Coinbase, even though it's supposedly it is, the most secure and reputable, at least, by reputation so far, it's not insured or guaranteed or subject to the protection of the Federal Deposit Insurance Corporation. And so what that means is if something happened to your account, the money in there, even if it's not in crypto that doesn't go down or go to zero, that money is not insured. You just lose that money. So here's an article from Fortune in May, and I don't know if they've come out with an update to the policy, but this was the headline: Coinbase earnings were bad. Worse still, the crypto exchange is now warning that bankruptcy could wipe out user funds. And so I switched over to Bloomberg because they had a paywall on the other one, but same article really. In one of their previous quarterly reports, they added a risk disclosure. If the company were to file for bankruptcy, the court might treat customer assets that the exchange is custodian for, their Bitcoin, Doge, whatever, as Coinbase's assets, and they'd be at the back of the line for repayment, forcing normal people unaccustomed to the ins and outs of federal bankruptcy court to claw back their money along with everybody else owed money by the exchange. Okay, at the time, Coinbase's bonds that were due in 2028 and 31 have tumbled below 70 cents on the dollar, which was far from bankruptcy, but still in line with some of the riskiest high yield debt in the market. Okay. And just to give you an idea, your money in a bank account, in a savings account, is FDIC insured. If that got hacked or something happened to the bank and they went bankrupt, your going to get repaid that money. Even at Robinhood, if cash in your Robinhood spending account is there, then you're eligible for FDIC insurance up to a maximum of $250,000. This is US Bank, and this is just an explanation of FDIC. FDIC is an independent agency of the United States government that protects against the loss of insured deposit if an FDIC-insured bank or savings association fails. Insurance is backed by the full faith and credit of the United States government. Since the FDIC established, no depositor has ever lost a single penny of FDIC-insured funds. FDIC insurance covers funds in deposit accounts, including check-ins and savings accounts, so high-yield savings accounts, money market deposit accounts, and certificates of deposit. FDIC insurance does not, however, cover other financial products and services that insured banks may offer, like stocks, bonds, mutual funds, shares, life insurance policies, annuities, or municipal securities. There's no need for depositors to apply for FDIC insurance or even request it. It's automatic. Standard insurance is $250,000 per depositor per bank. Okay, and so here's the deal. If you have cash in an investing account, so say you have a brokerage account, this is Schwab's site, or a brokerage account with any normal investment bank, right? Uninvested cash in a brokerage account earns interest and is available for investing or managing expenses. Holding cash here is appropriate if you plan to spend the money within a few days or would like to quickly place a trade. Assets in your brokerage account are protected up to $500,000 per investor, including a maximum of $250,000 in cash, by Securities Investor Protection Corporation in the event of an SIPC member brokerage fails. So same deal, you get insurance coverage on your cash and your fund, your investments, if the brokerage fails, not if an investment goes to zero or anything like that. The point is, crypto is the absolute Wild West. I'm sure there will be people that become millionaires and billionaires. There always are in every investing class or thing, even if they turn out to be total frauds. I'm not saying crypto is a total fraud. I'm not saying the technology, the blockchain technology isn't useful and could be very important in the future. What I'm saying is that right now the user experience is so bad and your money is not safe anywhere. I'm not educated on wallets and cold storage and all that stuff because I don't want to have to worry about things that way. And there's perfectly acceptable and realistic paths to all the wealth I would ever need by being smart with my money, working good jobs, earning more money over time, saving money, investing money, and not taking on excessive risks that I don't need to take on. And so that's my message today is we're not looking for shortcuts. Investing is fun. It's exciting. I love technology, but we don't have to take excessive, ridiculous risks.